Huge sell-off through those tech stocks, Steve, and that is really impacting across global asset markets at the moment.
Yeah, it is. And then on top of that, we've got, Richard, that UK-EU friction causing weakness in the pound and the cable plunging lower.
Hello everyone and welcome to our Trader Talks videos with myself, Richard Perry, market analyst at Handtech, and Steve Miley, the market chartist. Now, as ever, we always say if you're not trading with Handtech, you can always go to our website, hmarkets.com, to sign up for a demo account very quickly, or even sign up for a live trading account in 4 easy steps. Now, big moves on markets this week, Steve, and we have seen equities sharply lower and a strong moves in these forex markets. So where are you seeing things?
Yeah, well, obviously the big driver of a lot of the markets in here today and over the past week have been the equity markets, particularly the tech-laden Nasdaq. Having a
big rout in those
sell-off.
tech stocks, Steve, aren't they?
Yeah, 11% down in a matter of 3 trading sessions, Thursday, Friday, Monday closed obviously in the US, and then Tuesday. So 3 sessions down 11%, significant move lower in here.
But if you look in the context of how the strong move came up, it's not really a great deal, is it? But it's still big 3 days.
Yeah. It's a big move in that, and it's wiped out, pretty much a big chunk of, if not all of, the August rally. So we've taken out a huge amount of the longs from in there. I'm sure have been liquidated. But as you say, in the grand scheme of things, we've had that, near 84% rally from the lows. So it's not as probably impactful. So yeah, I certainly see this as a significant correction. I think the next day to 2 days are going to be really important to see if we can bottom out and rebound.
It seems as though that the futures are rallying in the European session, then being hit as the US trading comes back in again, doesn't it? At the moment?
Exactly. Yeah, definitely seeing that. I think there's a bid in Asia and Europe. Yeah, Asia and Europe holding in pretty well. We're trying to see rebounds in the US futures during the Asian and European sessions. But then it's then the US opens. We get the bell for Wall Street opening, and it's all and it's all in the red again. But what I think is really interesting is if we turn to the DAX and that kind of outperformance by the DAX in here over the past few sessions. During that sell-off in here, we've seen the DAX really, if we look at the DAX chart here, very sideways. We had a really strong rebound when US markets were closed on Monday.
Well, no real tech weighting in the DAX, is there? So
no, and so this is, I think, the big thing in here is Nasdaq gets pulled. The tech-laden Nasdaq pulls the US equity indices down. We've got something like 40% made up of like the top 5 or 6 stocks now make up 40% of the S&P. So there is
Euro sliding as well.
Yeah, and the euro sliding is helping the DAX out as well. So euro lower plus, old economy, real economy stocks in the DAX has seen it hold in. Technically, it's holding that trend line, really held that trend line that comes up from in June in here, rebounding more recently off the 12,754, having held 12,664 chart support. And more recently, it was only just Thursday last week, we popped to a new recovery high up at 13,460, going into that bear gap that we've got back from February. So it's partly closed that gap. We've set back from that, but I think there's a resilience to the DAX, and I think if we get any kind of normality and kind of rebound effort coming through from the US equity markets, we could see this DAX push notably higher.
Yeah, stability once it starts to come in. I think those 2 levels, 12,664, 12,754, those are 2 important levels initially. If they can start to build the support around there, I think you look at how, I've drawn in the lines, the horizontal lines on the RSI, it's effectively just ranging, isn't it? You can see that it's not really driving any real corrective momentum. So I think at the moment, if the stability starts to hold on Wall Street, then we could see some strong gains once again on DAX.
Yeah, agreed. And you're looking at the pound, right?
Yeah, this is the other one. We've seen obviously Brexit risk factors coming front and centre for sterling, hitting equities in the UK, but also hitting sterling, hitting gilt yields, pulling lower. And we're we are seeing that this sterling dollar rate coming back below the 130 big figure level. This was a key floor, sort of 29.80 to 30 big figure key floor throughout August, and that has now been broken, and it's broken any sense of trends. And I think that the fact that the pullback is now below 130 figure really does open the way towards the old breakout levels, 120, 26.50 to 128.10. Those were two key breakout levels from the summer. That becomes now supportive, and I think this is a pullback that we're seeing. And the problem that I think you've got with sterling at the moment is the political aspect of it. Doesn't look like the news flow is going to be all that sterling positive. And I think that ahead of this soft deadline that they've seemed to have set themselves of mid-October, I don't really see how sterling's going to cope well in that.
No, I agree. I think, when you've got this politics, this brinkmanship, the game theory being played in here, feels like Dominic Cummings behind this, kind of putting that October the 15th deadline in, this kind of soft deadline. So that, I think, certainly, takes us to a point of contention. And when you're in a point of contention, markets don't like that, that undecided tone. And so indecision leads the pound lower, I think. And then I know we're going to talk about the dollar as well, because the dollar is obviously helping cable lower.
Well, it is definitely. I mean, you've seen a whole range of risk factors turning negative in the last few sessions, really. And this is playing into this dollar rally that we've got. And that, again, coming at the same time as Brexit risk. Stronger dollar, weak sterling really does hit cable hard to the downside. You're seeing euro dollar drifting over, and sterling is the one at the moment that is really, really suffering. So I think that the fact that the dollar index is rallying is only in still a near-term basis. I still see that the move that the Fed took back at Jackson Hole, and they're going to confirm that through the FOMC meeting in September. That move, I still think, underpins a weaker dollar through the coming months and quarters to come. But I think at the moment we're seeing this near-term rally on the dollar. Yeah,
I agree. Short-term rally, but that's going to, continue to put downside pressures on cable. Double trouble really for cable. Pound weakness alongside dollar strength, and I think those downside targets, 128.10 as you've flagged, and then maybe as deep as 126.50 in the coming weeks into the end of September, highly possible and likely.
I agreed. I think that the ECB has a factor to play this week. If the ECB turns dovish in any way, that's going to drive euro dollar lower, which again adds fuel to that dollar strengthening trade at the near term basis. But again, I see the Fed as being a big factor in driving weakness on the dollar in the medium to longer term.
Sure, agree. Okay, great to speak to you again, Richard.
Yeah, good chat. Thanks, Steve. And we'll speak to you all next time for some more Trader Talks.